Hyperliquid is one of the best perp dexes that you can use, and currently there are traders out there that are making millions whether crypto is going up or down. So today in this video, I'm going to be giving you a tutorial on how to use Hyperliquid to do just that. Trade on Hyperliquid. So let's get started. All right, so first things first, once you're on Hyperliquid and you've connected MetaMask, what you're going to be doing is switching over that MetaMask account from Ethereum over to Arbitrum 1 if it's not already. Then from there, you're going to send USDC from your exchange to that single wallet that you just set up and connected to Hyperliquid, and you're going to be sending that via the Arbitrum chain. Then from there, you're going to go over to portfolio and you're going to deposit funds from that wallet. So once you've connected, then you're just going to deposit however much amount that you want. So for example, let's say you deposited $1,000 and you want $1,000 to come onto the account. You're going to be depositing USDC, which I would recommend, and you're going to be doing that via Arbitrum. And then you're just going to deposit. Then from there, on the trade tab, here is where you can take positions out. And so yeah, here you are. Let's get started. So first things first, you can see your balances in this bottom tab. Here under this arrow right next to Bitcoin USD, you can switch out the assets. So here is under perps. You can also trade spot actually via Hyperliquid. So it's a hybrid dex. It's not just a perp dex, but it's also a hybrid dex because there is spot trading. But if you want to be trading with margin, then you're going to be trading with perps. So here you can see all the assets that there is. You can sort by the funding, which we'll talk about in just a second. You can also sort by highest volume to lowest volume, or the open interests, which we're also going to talk about in just a second. Here, the little stars, you can basically star a favorite asset. So for example, you don't have to click this button and go down and select an asset. For example, I starred render, so I can just click on render up here and it's instantly going to take me to the render tab. Here we just have a simple trading view chart. So if you aren't familiar with that, then I'm not sure if you should be trading on Hyperliquid just yet, but here you can basically see the 15-minute time frame, the 5-minute time frame, whatever time frame you want. You can just select and put on a star. I usually like the 15-minute and the 4-hour typically. And you can also add indicators as well if you have a specific indicator that you typically like to trade with. There's also all the different tools that TradingView has as well. So for example, if you want a horizontal line to kind of map out support, if you want to maybe draw stuff or write stuff, you can just do that right here. And also one of my favorites which is the measuring tool, where you can basically measure, okay, what was the price change from here to here? That was 18%, 18.91%. And that was also in the course of 5 days and 14 hours. So I really like that tool. You can measure, what it's like from the upside to the downside. All right, so once you've selected an asset, you'll see the mark, oracle, 24-hour change, right? These different indicators here. Let's talk about them. So first of all, mark is really just the fair value price right now. It's not what, a lot of people have in their limit orders or in their stop losses. It's just the fair price right now. The oracle is basically pulling from all of the different prices on all other oracles and it's feeding it here. So essentially it's almost like the mark price as well. All right, and then here we can see the 24-hour change. This is negative 2,176 and is in the red, and it's down by 1.89%. What is this? So this is showing you the open interest, which we're going to talk about in just a second, but it is down by 2,287 contracts in the past 24 hours. And so it's down 1.97% in the past 24 hours. Now, the 24-hour volume for this on Hyperliquid right now is looking like $4 billion for Bitcoin. And this open interest is the sum of all of the long and short positions that are currently open right now, which is looking like $3.7 billion. All right, and then we have the funding rate and the countdown, right? What is this? This is an important value that you need to know. So with the funding rate, if it is positive, then the people who have long positions are going to be paying this percent to the shorts. We'll talk about this in a second. And if it is red and in the negative, then people who have short positions are going to be paying this percent of their value to long positions. And then this is the countdown rate at which that happens. So if it's green and you open a long, you're going to be paying the shorts. And if it's red and you're opening a short, then you're going to be paying the long. So let's just say you have a position of $100,000, right? And you decide to open a long on Bitcoin of $100,000. Then what this means is that in 25 minutes, you're going to be paying 0.0013% of that $100,000. So $1.30 is what you're going to be paying to people who have short positions. You're not paying this to Hyperliquid, you're just paying this to traders. So here we can see the order book. We have the bid and the ask, right? So here we can see what people are asking for. Here we can see what they are bidding for, what they are selling. Moving a bit further to the right, we can see that there is isolated and there is cross, okay? We need to talk about cross margin and isolated margin, all right? And I drew something up for you guys. I think you guys are gonna like this, all right? So what does it mean? Let's break it down in simple terms, right? Because that's how I understand. And I'm sure you guys are like this as well, but isolated and then cross. So with isolated, what does it mean? It means that each piggy bank only has the money that you put in it. So if one bank gets smashed, for example, you have a bad trade, then only the coins in that one are lost and the others are safe. So let's just say you select isolated and you select an isolated long on Bitcoin, isolated long on Doge, an isolated long on Render, isolated long on ARB, isolated long on Chainlink, right? If one of these trades happens to go wrong and gets liquidated, then you're only going to fail on one of these accounts that you have on that trade. Now with cross margin, it's a bit different. So with cross margin, all 5 piggy banks are connected with tubes. So if one breaks, then the money from all the others flows in to try to save it. If it can't be saved, then you lose everything. So let's just say you have, the same trades open just like you had with isolated, but this time you select cross, right, with every single one of your trades. That means that all of them are essentially connected. So if you have one that falls below liquidation, then these accounts, the account values are going to try to come in and save that trade by, hopefully without it getting liquidated. But if it just keeps going down, then all of these are going to get liquidated one after one, and essentially it can wipe off your entire account. So personally, I recommend selecting isolated for each of your trades. You're going to have more power if you select cross. Okay, you will have more trading power, but I really recommend isolated because you can get your accounts completely wiped out with just one bad trade. All right, you can just have a bunch of trades that are great, and then all of a sudden one bad trade just comes in and wipes it all out, and then you're screwed. All right, so I'm going to go isolated, and then in this example, I'm going to be trading, let's just say, with 10x leverage, right? So I'm just going to put 10x leverage there, just confirm it. And then from here, let's say I wanted to make a simple market trade, right? Well, first things first, I'm going to look at my balances, and here I can see the USDC value that I have on my account. And then I'm just going to click transfer to perps. Then I just transferred that value from my account to, which was in the spot, and I'm trading it and sending it over to the perp in my account. So now my perp balance is $489, and now I can make a trade. Now, before I make a trade and before you make a trade, make sure to sign up with the link, which will be in the description below. It's just minted max in all caps. So if you're signing up to Hyperliquid and you see a place where you can put in the code, it's just minted max. Here, you're going to be receiving a 4% discount, and you can't get this anywhere else. So you can only get it here through me, and you're going to have this through its entirety. And there are traders who are using this right now. For example, one trader who's used this, and he has made over $57 million in trading volume, and he's paid out $22,000 in fees, but he would have been paying a lot more had he not used that link. So if you want to save on Hyperliquid in its entirety, then make sure to use that link in the description below. Now, let's just say I wanted to make a simple market trade, right? I'm just going to select market, which is going to be trading around the mark price. And from here, let's just say I wanted to trade 10% of my portfolio of that $489. Then from here, 10% of that with a 10x isolated long is going to be this. And here I can just place the order. If I want to go a step further and put on a take profit and stop loss, I can do that right here. So for example, if I wanted to put a take profit right at, for example, like let's just say 113,000, I can do that right here. 0.61% gain, or if I want to put the percentage of the gain that I want, for example, let's just say I want a 2% gain, I can do that right here. If I want no more than a 3% loss, I'll just do that right here. Place order, boom, we're in. Now, once we're in this position, here's the stop loss price and the take profit price, and the P&L. I can just move this up at any time. So I can just move it and it'll instantly be modified. So that's one way. So for example, let's just say like price started going up. I could actually move my stop loss to kind of follow the price and do this in a sense of like a manual trailing stop. So sometimes I've done that before where I've set a take profit and stop loss value, but as the price kind of moves up, I've taken my take profit up, but I've also moved my stop loss up as well. This ensures that you're going to be getting gains, and it also ensures that you're not going to be stopped out at a loss. All right, so now let's also say that I want to go to Ethereum and put in a trade. Let's just say I want to go long at 10% for isolated value of, let's just say 10x, right? I just go here, click confirm. And from here, I'm just going to put take profit at 4212. Let's just say 4212 and stop loss at 4185. Okay, 4185. And I'm just going to place the order. It's just going to be a market. So I'm going to go in, boom. Right now, I'm in a market. And here it looks like I'm up 0.1%. Can you believe it? It's amazing. Now, if I wanted to just close out of a single trade, I could just click this button, market, and it'll close out of that Bitcoin trade that I had earlier. Or if I hover over here, it's going to close out of that Ethereum trade. If I want to close all immediately, then I'm just going to click on close all right now. And here I can just click on this and I can confirm at a market close, and boom, all of those orders are going to be out. So now I'm out of the trades. So let's say you don't want to do a market order. Let's say you want to do a limit order. Like for example, Ethereum wicked down pretty hard today. Let's say you want to, put in some, I've heard them called stink bids before, where you essentially just kind of, you look at the price action and you kind of figure, okay, maybe price could actually wick this far down. If it happens to just magically wick this far down, then I'm going to have an order in place just in case it does. So here, what you're going to do is you're going to go over to the limit section right here. Then let's say you wanted to go long and you wanted to be one of the people that, for example, like there were people in here that bought. And so let's just say you wanted to do that in the future, right? How would you do that? So you would simply just go to the limit order. And let's just say you wanted to buy long, and I wanted to buy long at 3,924. So I wanted to buy at 3,924. That would put me in right around here, right? And I wanted to buy, let's say 10% of my portfolio, so 0.1244 Ethereum. I could also select USD if I wanted to select the USD value, but in this case, it'll just be an Ethereum value. And here I'm just going to select GTC, which is good till canceled. There's a couple other values in here, but I just put good till canceled. And then I'm going to put on a take profit instantly. So let's just say if it wicked back up to 4,100, then I'm going to have a 44% gain. So, and then place order. All right, so here you can see that I have put on a limit right here. You can also, by the way, if you want to kind of move the chart just a little bit, then what you can do is just hold down the sidebar and then you can kind of extend it to the side. So here you can see that there is a limit. So if Ethereum happened to just go down to this range, right, it would buy right in here, right where I put that limit order. And then I would take profit immediately at this range. And, I could have done that today. Like, let's just say I put in this stink bid, right, to this level. It would have just made me instant profit, right, if it happened to wick down. So that's kind of a good feature if you actually just want to put in some limit orders in case of a black swan event, which does happen a lot in crypto since it's so volatile. Now, if I wanted to just cancel this trade, I would just click on the X right on the limit order. So I just clicked it. Now it's canceled. So if I wanted to short Bitcoin, right, let's just say I wanted to, I was feeling that it was going to, the price was going to go down further, I would just click on sell short. And from here, I could do the same thing. So I could limit it where, for example, if price went up to 113,000, then it would instantly set in that limit order and then it would put in a sell order. So that's one thing I could do. I could just put in a market order right now and sell it instantly. So I'm expecting that it's going to the downside. Let's say if I did want to put in a limit order to the downside, right? Let's just say I think Bitcoin is going to bounce back up to, let's just say 113,680. And then I want to put in, let's just say 50% of my portfolio and I want to then take profit at 112. So 112. Let's just say with the stop loss, I'm going to put it at 114,000, and I'm going to place the order. So what does this mean? So it means that when the price comes up to this level right here at 113,680, then I'm going to be in a short position. So if price happens to go back down to this level, I'm going to take profit at $112,000. If it keeps going further up, it's going to get stopped out, and I'm going to close the trade immediately. If I want to cancel it, just like always, all you got to do is click on the little crosshairs, and then you'll be back to click to cancel. Click to cancel. It's done. If you have any open orders, right, that you want to just check up on, click on the open orders tab and you'll see them all down here. Now, there's a couple other things that I want to talk about before we wrap up this tutorial, which is the pro section here. So there's the scale, stop limit, and stop market, and TWAP. I want to talk about each of these just real quick. All right, so first things first is scale. So let's just say I wanted to put in a scale order. What does this mean, right? How does this work? Well, let me just kind of briefly go over some theory here. So basically, scale lets you split a large order into multiple smaller limit orders across a price range. Instead of placing one big order at a single price, you can distribute entries or exits over several levels. And before we get into this a bit further, scale lets you change the entries over the price range. TWAP lets you change the price range over time. Okay, so they're kind of similar, but kind of different. Now with scale, and a lot of these, if you are a bigger whale, this could definitely help you. So with scale, people use this if they don't want to move the price up on the chart immediately because their order is so large. And okay, so I'll just show you how this works in practice. So here, let's say I wanted to buy Bitcoin, right? So let's just say I wanted to buy Bitcoin at $110,000, and I wanted to buy that all the way up to $115,000, right? And I wanted to place 10 orders for the size of one Bitcoin. And here you can see that there is something called the size skew. What is that? All right, so skew is a value from 0 to 100. So if I had 10 orders for one Bitcoin in between these price ranges, what is it going to do? It is simply going to place 10 orders, all of the same value, in between these price ranges. So then let's just say if I change the skew to 90 out of 100, what is it going to do? It is essentially going to be buying more towards the upper end of this value. So it's still going to be placing 10 different orders, but it's going to put the most effort and the most amounts in the order towards the upper range. And this can be useful actually in some cases if, for example, you have an asset that's going into a breakout zone, you can buy into that breakout, for example. And you can just select good till canceled and then, just place a trade. All right, so then we have stop limit. So let's just say you're already in a trade and you select stop limit. Like, how would this work, right? So let's just say Ethereum is trading at like $3,000 and then all of a sudden price just nukes to 2,500, right? And just goes in that range, let's just say. If you were already in this trade and then, you just wanted to set a stop limit, and let's just say price right here is at 3K. So let's just say that you set a stop for 2,900, right? And that's right here. So this is your stop. And then you set a limit at 2,895, right? So if ETH happened to just go straight from $3,000 all the way down, just wick super hard and just a nuke straight down to 2,500, this order will actually not take place. So it's kind of like a stop loss, but it's different because it protects you from getting super wicked out. Like, let's just say you wanted to set kind of a safer stop limit and you wanted to set the stop at 2,900. Then from there, once the stop is placed, then your limit is going to be active at 2,895, and that's only going to take place if the price happens to be at that point. But if it happens to just nuke harder and goes straight down to 2,500, then this order won't get placed at all. Instead, price will actually have to come back up to 2,895, and then that order can get placed, and then you can be stopped out. So the stop price is the condition that the order activates, and the limit price is the price that you're actually willing to trade once that order is triggered. Another fun fact about the stop limit as well is that you will not be on the order books until your stop is in place. So the stop has to come in place first, and then the limit is going to be shown in the order book. Now we also have the stop market. This is something that I really wouldn't recommend actually, because if you put on a stop market, essentially what you're going to do is you're going to be placing a stop, and you're kind of saying, okay, if price triggers, like let's just say, $112,000, I will just sell for anything on the market. But let's say if there isn't orders that are immediate around the fair market price, and there are limit orders further below, then you're going to be, going to those quickest limit orders, if that makes sense. I don't recommend it because you're not going to be getting the fair value of that price point. So I don't recommend it. TWAP is also a really interesting one because essentially you can buy or sell over a specified period of time. So let's just say I wanted to buy one Bitcoin over the duration of like 4 hours. I could 4 hours and 30 minutes. Let's just do that. And I can randomize it, and then I can just buy. It's pretty interesting. Or if I was a whale and I wanted to buy like 10 Bitcoin over the course of 4 hours, it'll just randomly buy into that position and build into it. Or you could also sell out with TWAP that way, and you can just kind of select, okay, maybe over the course of 45 hours I'm going to sell out of this position, or maybe over the course of this of this time frame I'm going to buy into this position. So that is also really powerful. Now, if you're still watching this far, there's actually really cool tools out there where you can actually find other Hyperliquid traders, and you can actually copy their positions, and you can copy all of their trades. You can see exactly what they're doing. You can also get breakdowns on all of their trades and figure out like how much have they made, their P&L stats. And then if you like that trader, like I said, you can copy their trades. It's a really interesting feature. If you guys want me to make a tutorial on that, let me know, of course, in the comments down below. And hopefully you guys like this video and this in-depth tutorial on Hyperliquid. Hyperliquid is a great platform if you want to go long or short on crypto. So that's all I have for this one. If you want to sign up for Hyperliquid, use the link in the description below for a discount on trading fees. See you guys in the next one.